Hello, this is RR, your mortgage guy. Now that we've established the differences between a pre-approval versus a pre-qualification, what's the next step that happens after you get pre-approved? Well, today we're going to share a do's and don'ts list with you. Once you're pre-approved, here are some things that you should do. Continue to make all your monthly payments to all your creditors, whether it be installment debts, revolving debts, student loans. Continue to pay everybody on time. Also, keep your job. If there's a potential job offer that comes along and you decide to take it, no. First, talk to your loan officer. It's pertinent that you keep your current job. We will do a final verification of employment 24 hours before we close. And so please do not change any jobs. If there's any changes to your financial situation, please inform your loan officer. Now here's some don'ts that you want to pay close attention to. Don't open up any new trade lines because that will have the potential to decrease your credit score. Don't use your current credit cards. If we pulled your credit and your Capital One had a balance of $100 and the limit on it was $500, and then we get to close and you're maxed out, that also has the potential not only to lower your credit score, but to increase your income to debt ratio. Because you remember, the higher your balance on your credit card, the higher the minimum payment is, which has an impact on what you qualify for. So don't use your credit cards during this process. Also, when we talk about opening new accounts, here's what happens. I had an individual, they were 2 weeks from closing, loan was approved, they were ecstatic, and so they went out and did a Levin's furniture purchase. They saw advertised, no payments for 4 years. So they thought, okay, we're golden. No payments for 4 years, my lender won't know, I'm good to go. That's not the case, because here's what happens. Even though they may advertise no payments for 4 years, as lenders, we look at worst case scenario. So if you bought $10,000 worth of furniture, and we assume that at the end of the 4 years, it wasn't paid for, what's the minimum payment due? And so if the interest rate at the end of 4 years is 15%, you have to qualify with that payment on $10,000 at a 15% interest rate, which will probably knock you out of qualifying for that particular home. It will affect your income to debt ratio. So therefore, regardless of whether they tell you 0 payments for X amount of years, do not open any new accounts because they can potentially have an impact on your qualifying for that particular mortgage. Just a helpful tidbit. Have a great day. This is Rodney Reynolds, your mortgage guy.